All right, everybody, welcome. Doug McKay, antiwallstreetguy.com on the 14th of October, 2011. Last week, we ended up right here. Last Friday, we were below the 50-day moving average. We were below the 30-day moving average and below this downward sloping trend line. So as of last Friday, we had the overall trend still as short or down. As I did mention, we did exit any short positions intraday on this key reversal day. This week on Monday, we had follow through. In other words, we broke above the downward sloping trend line. We got above the 50-day moving average, which is the blue line, and the 30-day moving average. That was a signal for us to jump in, even though volume was a little light. In this instance, price rules. Now today, we were watching, or throughout the week, also 1220 on the S&P cash. We got as high as 1220 intraday. The high on Wednesday was 1220.25. Yesterday, the S&P was down a little bit, but then again, we closed through 1220 today. 1220 and 1228 is a key area of resistance that traders have been watching. I would say more specifically 1220. So the overall trend as of Monday intraday, because we looked highly probable that we were going to close, which we did, above the downward sloping trend line in the 50-day and the 30-day, the overall trend is long. Now, if we were to break this area of support, 1150 on a close, which happens not only to be support with these candles, but also the downward sloping trend line, at that point we would either exit or we would hedge 1-for-1 any long positions. So if it went below 1150, we would stop any bleeding. But as it stands right now, the overall trend as of Monday is long. Where do I think we're going to go? The most obvious target here would probably be around the 1250, 1260 range. An even better looking chart is the Qs, which, as we talked about last week, came off this bottom here. Has been trading above the 50-day for a longer period of time and also above resistance. So Qs could be going to a multi-year high sometime soon. QQQ. We definitely want to see the NASDAQ hold that 2600 level, certainly 2500, which would be the 50-day moving average along with support. One of the other things that we looked at last week that we did get into this week is GLD. We identified these gaps here on the 4th of October. We thought that if we got above this trading range, the odds are we were going to go up and fill those gaps. That doesn't mean it's going to happen, but the odds increase once we get above this range. Conversely, if we were to break below this area, we thought that 150 was in the cards. So as it stands right now, we do have a small position as well in gold. We did exit today. For those individuals that held it, our short position, double short the 20-year treasury in TBT. We did exit that today, but again, this was a buy. A chart is a chart is a chart. Once we got above this channel, if we were to draw another line in here, we'd have a channel and this downward sloping trend line. What else, you guys? Other individual stocks, Apple. We said that if this was, it needed to hold 360, which it did. Once we got above the trend line and the 50-day moving average, it became a buy at this time. We put out a post on the 12th that we'd want to see 378 hold. 378, all-time high today on Apple at 422. Maybe we'll see a little back and fill next week. There's a gap here on Apple. If we take a look at the SPY, which shows gaps, the SPX does not. We have a little gap as well. But I think a pullback to maybe 120, 1200 on the S&P cash would be very healthy. We would also want to see 1160, 1150 hold as well. All right, you guys, that's it. As of Monday, the overall trend in the broad market equities is long. We'll see you next week. Doug McKay, antiwallstreetguy.com on the 14th of October, 2011. Thanks.